Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we're here to bring you the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I am your host, as always, Brandon Shar. Ethan is unfortunately out sick, but I have a special guest tonight. JP from Tailored Trades LLC is blessed us tonight with his presence, and he's going to share with us some of his experience in the market. JP, how you doing?
Good. Really happy to be on the show. It's we've been talking about doing this for a minute, and I'm happy that we finally were able to align the times so that we can get this going. You know, I like to go by the name of the Agent Trades on the internet, but everybody calls me JP. Yeah, you can always either call me JP or the Agent Trades, but please stick to JP.
I like it. The Agent Trades. I like it. It's mysterious.
Yeah, right.
Yeah, so for everyone listening, just a little bit of background. I actually got in touch with JP probably a couple months ago, came across him on Discord, obviously with Tailored Trades. How would you best describe Tailored Trades? You provide a lot of, trading services, alerts, things like that. They also have a YouTube channel where they provide free education as well. Is that fair to say?
Yeah, I mean, more so than anything, I like to consider us to not be your typical Discord service. When we started this community about 3 years ago, the purpose of Tailored Trades was literally what the name says, Tailored Trades. We wanted to get a group of affluent traders, day traders that were trading with big size or big accounts for that matter, anything with above 100, 150,000, and kind of just share ideas with each other. We were pretty successful at doing that. We started a very small group. It was about 10, 15 guys, and we all kind of had the same background. We were coming from corporate America. Some guys were bankers, some guys were realtors, some guys were in politics, believe it or not, business owners. And we were never the community that was trying to look for, the get money, make money quick kind of scheme. We were just looking at how can we trade like professionals and not fall into the degeneracy of trying to trade zero DT options, right? So that's what we basically became. We've never been a community that charges for education. We don't charge for mentorships. Nobody here is selling any product. We basically just have a community that people pay to get in so that everybody can chat, and that just basically keeps the operation going. But yeah, we try to provide as much free content as possible so that people can see that they don't have to spend money to really learn a lot, because all of this stuff is available online. And I was quite fortunate because both of my business partners, who go by the name of the Market Bishop and Bear, both had the same mentality and approach towards the space. With Kevin, or the Market Bishop, being one of these guys that's been in the space for over 10 years, when he joined us and we partnered up with him, that's when we really saw the huge potential of providing free education and a service to people that had value, as opposed to just trying to get monthly rotations in and out, right?
Right. Yeah, and just to speak on the free education part, what you bring to the table with Tailored Trades and the YouTube channel, and I've obviously spent some time, going through it and seeing what you guys are providing. And, the thing I personally love about it is just how raw it is and how real it is. As you know, there are tons of people on YouTube, that can be very cheesy, trying to sell this or that, a lot of clickbait, right? And I know I've heard, the Market Bishop talk about that as well. And it's definitely something I've seen over the past, especially 4 or 5 years. And what you guys bring is a lot of transparency, I feel like. I think that's part of the reason why we kind of clicked, because here on Stonkcast, very similar. We're more so a market show, of course. We're just looking to bring the facts. So that's one thing I definitely appreciate about you, and obviously what Market Bishop do. So that's great. Um, One of the things I wanted to just kind of briefly touch on, and we can take the show wherever you want, but just to give the people some background, right? Can you just share with us a little bit about your journey? I know you've had some extensive time in the market, a wealth of knowledge. So if you wouldn't mind just sharing with the people, what initially got you into the market. Yeah, let's just start there, I guess.
Yeah, I mean, I started. I'm going to be 42 April 1st, which is hilarious today, April Fool's Day.
It is.
I started trading when I was around. I would say I was around 21 or 22 years old. I had really discovered. I had found this unique um, um, love for markets and price action and understanding, company fundamentals, and how exponential growth happens within firms. And you know, at that age, living in Miami, it's not. I even 20 years ago, Miami was still an incredible place to live. It was an incredible party scene, and being young and in Miami, you kind of get distracted with all the fast cars and fast women, I like to say.
Sure.
um, you know, I would look at things from the point of view of like, wow, man, I wonder if trading can get me all the stuff that I want. That's kind of how I looked at it, right?
Yeah, it's
I
a
didn't,
natural 20-year-old
yeah,
reaction,
the
right?
natural 20-year-old. And then I was like, after a couple of months of really studying markets, I was like, wow, there's a lot more to this, and I can get really good because I had developed a unique ability of understanding fundamental analysis, and I just didn't understand how I grasped it so quickly. But it was something that came organically. It was in my blood. It was in my instinct. I owe that, I believe, to my mother, who's been an entrepreneur her entire life. She owned multiple businesses, very very successful woman. So that understanding of business and how things develop came pretty naturally. Um, you know, in my 20s, I had an opportunity to go and actually follow the path of going to Wall Street. Um, Many, 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 many moons ago, I was approached by what was then, Smith Barney, which was an extension of Citi, and I wasn't too captivated with the idea of getting in the financial markets, and then I actually ended up going to Wells, and I went through their FA program, and 6 months into it, I got the hell out of there. That was circa 2007. And it's funny because I got out of there exactly 6 months before we had the entire situation where Wells got caught, shilling products to dead people and, and giving
I
fake credit.
remember that.
Yeah, right. And I was working at the office at a particular location in a very affluent part of Miami. Fast forward, then we had the 2008 collapse, and I was like, this is incredible how I timed that perfectly. But I didn't pursue the financial career. I instead ended up getting in the music business, where I ended up becoming a very very successful talent agent. Um, Up until 3 years ago that I left that industry. So I was in that industry for about 15 years or so, and I represented some of the biggest names in the electronic dance space. Um, I mean, it was incredible. I mean, I worked with people like Armin van Buren. I worked with people like Chusin Ceballos, Art Bat, Camel Fat. I mean, I can just go on. The list goes on and on and on. And it was Eric, rest in peace, Eric Murillo, and it was a great experience. I loved working in the music business, And I lived in Ibiza, I lived in Amsterdam, lived in DC. It traveled all around the world. It was great. But even though I was inside of the music business, I was still involved in the markets. Because even though I was passionate about music, the markets kept calling me and calling me. So without going in through the whole Dante's Inferno of the music industry, how I became a full-time trader, I was always investing. I was always putting a little bit of money in the markets. I was always being very tactical with what I was doing. Um, I was very good at hedging positions. I was really good at finding the bottoms of things. And I was able to grow my portfolio to a very substantial size, in the hundreds of thousands, and starting off with only 25K.
Wow.
And I really did develop this unique ability to really understand price action and fundamentals, as I had mentioned. All this time that I'm in the markets on an independent level, my friends are working in Wall Street. They're all living in New York. Some of them are living in Chicago. Some of them are pit traders. I start to develop relationship with big boys in Wall Street, guys that are much older than me that are now my mentors. And it kind of just became a thing where I was like, you know what? I'm doing really good at this. I have such an extensive network of people that are professionals that are calling me, asking me for advice because I just had an ability to get a good read on the market. And 3 years ago, I took a leap of faith and I said, I'm tired of traveling the world, which sounds weird. Um, I'm tired of not having a place to actually call home, even though I
Right.
did in Amsterdam. And I said, at that point, I'm 38 years old or whatever it was, 39. I said to myself, okay, if there's going to be a time in my life where I take a leap of faith, it's going to be now. So I discovered this thing called Discord. Like, what the hell is this shit called Discord? And I found out that it was a community for gamers. And then I ended up discovering trading communities and I met some really smart guys. And about a year into this space, I called a buddy of mine and I said, listen, we've been trading together for a year. At this point, I was the big account of the group, okay, if that makes any sense. And I said to him, listen, man, what are we doing here? You're doing great. I'm doing great. Why don't we start our own community? And he goes, no, 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 I don't want to do that. That's stupid. I said, listen, think about it. Calls me 2 months later. He said, hey, remember you told me about starting an online trading community? He says, do you still want to do it? I said, yep. And he goes, but this is how I want to do it. And these are my guidelines. I said, we're on the same page. And then before you know it, Tailored Trades was born. And 3 years later, I'm a full-time trader.
That's wild. That's wild. And especially with, your journey, it's very unique, right? To go from like trading opportunity to go to Wells, right? And Wall Street and then music industry and now to circle back to the markets and of course on Discord, as you said, is really quite the journey.
Mind
As
I
far
tell you, mind I tell you, sorry to cut you off.
Go ahead.
The I didn't like the financial institution
Why is that?
market because I think if I would have been living somewhere else at that time, it might have been different. But I was living in Miami. It was the heyday of the ninja loans. Everybody was a mortgage broker. I was living in an apartment at that time that a year earlier was worth 250,000. I'm talking about 20 years ago. And suddenly that apartment was selling for 650,000, right? And it made no sense. Yeah, I was on the top floor of a building overlooking the ocean. That's different. I get it, but it just didn't make any sense. The psychopath inflation of prices that we had. Then I was seeing, when I was without really getting into details, the people that were working inside of the financial institutions at that time, let it be on the retail or wealth level, it felt like they were used car salesmen. I felt like they were all former, T-Mobile employees. You know, it was the same haircut, the same build, the same look, the same car. I was like, I don't fit in this because it feels like they're just shilling, product rather than actually concerned about, developing, individual relationships. So, you know, when I got into the music business, that was by chance. It was by accident because a buddy of mine who's till this day is a very very famous music producer in the Latin music world, which is where I got my start. He's like, man, you should jump into this, and for some reason, I just was really good at dealing with people and connecting them, and that led to me becoming an agent and representing talent. But like you said, that weird circle of going from the music industry and still loving having a passion for the markets to now going full circle almost 20 years later to doing this on a non-professional level is something that's unheard of because not many people, just get up and say, "Oh, you know what? Today sounds like a great day to leave it all behind and go on a journey." Well, I did.
Yeah.
So,
Yeah, that is wild. And I guess it kind of leads me into my next question. Just for the audience, right? With all the wealth of, trading experience that you have, how would you best, I guess, classify your trading style as it stands today? I'm sure it's changed over the years, right? From when you were 20 up till now. But how would you, quote unquote, classify yourself?
well, I learned how to trade from an individual whose name I won't say. Um, well, I don't care. You know what? I'm not going to drop his last name, but his name was Matt, and he was an older gentleman that I happened to meet online, and he was the guy that taught me the importance of fundamental analysis. I believe, he was a software engineer, but man, could this guy trade penny stocks like a pro? And I actually learned how to trade using parabolic SARs
Okay.
and Bollinger Bands. Uh,
Interesting. Okay.
it was a different time back then, right? And I was only trading equity and I was trading penny stocks. Um, and this person drilled into my head the importance of understanding price action, support and resistance, understanding how Bollinger Bands actually work and how parabolic SARs actually work. I was a big MACD trader at that time.
Okay.
Big MACD. I mean, huge. I mean, I had specific ways that I had my MACD set up and signal entries on time frames that nobody understood what I was doing. But yeah, as time passed, that strategy needed to evolve. And then I learned how to trade off level twos and time and sales. I became a big level two a trader. Uh, big,
Important
big, big,
skill.
big, 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 big tape reader. Till this day, that's my number one weapon of choice. Um, and a couple of years later, because I was always a big, also major moving averages, like the daily SMA kind of guy, right? The 50, the 20, the 10, the 100, the 200. But then as time evolved, I started really incorporating exponential moving averages with price action on level twos and reading tape and looking at the bigger picture of trades. I think that as when I was younger, I had the willpower and the mental stamina to trade on a 1 minute chart or a 3 minute or a 5 minute. And as I got older, I just didn't have the stomach for it anymore. So I started becoming a longer time frame trader. I went from looking at 1 minute chart, I'm sorry, 30-second charts, 1 minute charts, 5 minute charts to 15 to 30, to now at this point in my life looking at 65-minute, 130 and 8 hour charts, right? And taking my trades off of that. I think that that's just a natural evolution that as you get more money in your account and as you build more successful trades, you want to be in them the longer and the smaller time frames no longer make sense to you. So going back from where I started, which I would say I was a scalper. I was a scalper. Um, in my early 20s to suddenly becoming an understanding in my mid to late 20s that I need to look at bigger time frames and become more of an investor and less of a day trader, to where I'm at now, where I've become more of a long-term position trader and swing trader. Style-wise, nothing ever changed. I'm not a big technical analysis guy. I don't sit around here and draw, falling wedges, rising wedges, rectangles, pennants. I don't do that. I specifically focus on, am I trading on major pivot structures? Am I trading on areas of support and resistance? Where am I on my daily SMAs? And where am I on my EMA structures on 30 minutes plus? And that's where I'm at now. Still use RSI, standard RSI, still have my custom MACD settings, but I only use those two specific, what I call, oscillators for bigger time frames, because RSI can get all loopy when you're looking at anything under 30 minutes. So yeah.
Right. Right. Yeah. I know what you mean. I mean, I'm a big RSI guy myself, and I generally don't look at it unless it's on the daily, because as you mentioned, right, on those lower time frames, it can get pretty wonky. And
Yeah.
really, that goes for a lot of indicators. I mean, I've heard you say the same thing about MACD, right? If you're trying to look at a MACD on a 5 minute, I mean, it's going to drive you nuts. So, um, yeah, I mean, MACD, and you mentioned SAR, right? That's something I haven't used a ton, but I've looked into it. Funny you should mention that, because I was actually looking at it the other weekend. How would you classify that indicator? Is that a momentum indicator?
Um, it's different now.
It's a
If I
trend, right?
don't if I tell you that before, the way that we used to read parabolic SARs was that once we got three dots underneath the candle, it means that we were we were directionally moving up. You would say that it was a momentum. It was a momentum indicator. It was, you know, parabolic SARs back in the day worked for what they were. On a daily chart, if you had continuation in the trade, basically all it was doing was telling you, hey, we're ticking in the right direction, that you're in the trade, right? Because as you know, there could be, X amount of points inside of a candle, but when you're looking at directional moves for major targets, the only thing that you really want to care about is that your 4 hour and your 8 hour, in this case your daily, are maintaining that directional move. So parabolic SARs function on that capacity for me.
Got it. Okay. Yeah, it's interesting because I use Thinkorswim, and there's a website called TOS Indicators. I don't know if you've heard of it.
Yeah.
Excellent website. They provide a lot of pre-built indicators on Thinkorswim, but they tweak them with a lot of coding that I neither have the time nor capacity to figure out myself. So it's nice to leverage them, and they actually built like a smarter parabolic SAR, right? Which is kind of interesting. I've been playing around with that with some different strategies, but okay, cool. So that's interesting. Thanks for sharing that. Um, I think one of the things I wanted to kind of touch on, right? So we have a lot of newer, and you and I have talked about this. We have a lot of newer traders that are, continuously coming into the markets. A lot of like really young guys, right? And girls, 18-year-olds, people opening up their first brokerage accounts. Anyone doing it right now in the midst of this, bear market we seem to be sliding into, seems like really poor timing, right? So I guess, from your standpoint, with your experience, if you could go back in time to the beginning, what would you do in a way to kind of simplify the process starting out? I guess, what would your advice be to some newer traders coming in, that that way they don't blow up, that way they don't get in with too much information, get overwhelmed with this indicator and this thing and that thing, right? What would be some of your advice to, I guess, that group of traders?
I mean, I can only say it from the point of view of how I started. I like to keep things simple. I don't like to have too many things on my charts. For the people that are in my trading community, and the people that watch our videos on YouTube, or whenever we're live streaming at Tailored Trades, I keep it very simple. I draw my own levels. Sometimes I have pivot structures. I have EMAs, which I use for intraday trading, and my SMAs and RSI. I think that what happens is that there's a lot of people that get wowed with these spectacular concepts that don't really exist. They don't exist. And I know they don't exist because the people who are now my mentors are I'm not going to drop names. The former head of UBS bond, the former head bond trader at UBS from 1980, who knows what, he was there at 80 in 87 up to the 90s, where then he went to Sumitomo and SocGen. The former head of First Boston, who, if anybody goes to our YouTube, they'll know exactly who I'm talking about. I don't like dropping these names, right? One of my other mentors was one of the biggest pit traders in Chicago. He was one of the if not one of the most recognized NASDAQ traders in the pits. And then, he went into the oil futures. All these guys, when you talk to them about all these complicated things, they look at you like, what the hell are you talking about? I'm looking at breaking closes above the previous day candle, or breaking close above or below. Where are we trading on the major moving averages? Where are we in the overall indexes? And is this putting in a reversal or not, or is this a continuation? That's it. The more you complicate your process, the more you're going to invent reasons as to why you're losing, right? Oh, there was a liquidity sweep. What are you talking about? You know what I mean?
Right.
They came after my stop loss. Who are you, guy? You know what I mean? They're not
Yeah.
coming after your stop loss, So I would tell the majority of the new traders that keep it simple, find major areas of support and resistance, find one or two indicators that allow you to understand price action, and keep it simple. This is my target, this is my PT, and this is my stop loss. If it hits my stop loss and then it decides to bounce and go parabolic 150 points, whatever it is you're trading, who cares? There's another trade. If you set a price target, let's say you're trading Apple and it bounces off 107 or 112 and your PT is 205 or 207, and you go in and your stop loss is 204.75, and it goes to 204, 90, and then it comes right back up, and your PT is 218, and it hits 218, and then it breaks through 218 and it goes to 230. You shouldn't care what happens after 218, because your entry and your exit was set. You said, this is going to be my price target. This is where it's going to go. Whatever the hell happens after that, I don't give a damn, because my next trade is what I care about. Because here's what ends up happening to a lot of these novice traders, right? They're like, oh my God, it's going to go to my price target. Let me raise my price target up. Now you've completely changed the entire game plan that you had as to how you were going into this position, because you had a feeling that you were going to have to update your situation because you thought that maybe you could get another 2 points out of it. The last time my mentor, who's my neighbor, we'll call him former
That's
UBS.
convenient.
Yeah, right. We'll call him Mr. UBS, right? He says he was working. He was. I think he was at UBS at that time. His boss comes in and he goes, well, why are you long in this position? He goes, because I feel it's going to go up. And his boss goes, last time I felt something, I got gonorrhea.
You won't forget that.
Yeah, exactly. So go in with a plan and keep it simple, because the minute you adjust your plan or you change it, there seems to be some weird demon that exists that the minute you say, I'm going to try to get an extra dollar out of it, something happens in the news.
Yeah. No, it's so true. It's so true. I mean, look, I have a quarter of the trading experience you do, but everything you're touching on, I can definitely relate to, especially starting out where it's like you have 20 indicators on and you're like, oh, I figured it out. I back tested my 20 indicators, and you just drive yourself crazy. And just being in a position where Oh, you know what? Let me just move my stop a little bit lower. You're just justifying, you're like co-signing your own BS instead of sticking to the plan that you initially had, right? And I think it was Mark Douglas who had a quote in one of his books about it's more important that you follow your plan than it is that you make money, because anytime that you make money from breaking your rules, you're inevitably going to lose that anyways, or something like that. I'm paraphrasing, but it's so true. So true.
One of the other things that I always say, I read Trading in the Zone more times than I like to admit.
Great
And,
book.
it's a great book. It's all about, it just teaches the psychology of trading, or for that matter, how to be a better man. But, you know, to new traders, trading will bring out the worst in you. Any bad habit that you have will will directly be shown on your screen.
Manifest.
If you are someone that suffers from anxiety, if you're someone that's depressed, if you're someone that's highly emotional, it's going to reflect in your trading. I have no problem admitting this. I am a horrible day trader. I am the worst. I cannot take a day trade to save my life. Don't get me wrong, I'll put on some heat and I'll get a couple of winners here and there, but that's not my forte. Because I know that when I'm day trading, the fiend that lives inside me comes out, right? And I'm looking at the screen and I'm freaking out and I'm looking at level twos and I'm looking and I'm reading and I'm looking at tape and I'm like, oh my God, 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 oh my God. And that guy starts to come out. I don't like that guy. That guy stresses me out. So I recognize what I like to do and what I don't like to do. So the new traders that are coming into the market need to understand their personality, need to get to know who they are as humans before they put on any heat. Now, I've been doing this for 20 years and I've been successful. And believe me, I've taken some nasty hits. My biggest loss was $54,000 in 2 days. I'm sorry, in 2 weeks. I saw my trade bleed down and I kept averaging down, adding more, adding more, adding more, adding more. And that was on Uber. I got to the point on that position where I had to call a friend of mine to log into my E-Trade Pro and close a position. That's how bad it got. So I know what it's like to blow someone's yearly salary. You know what I mean? So nobody can come to me and tell me, oh, you don't know what you're talking about. Because my losses were not, I lost $100, I lost $50. No, my losses were in the thousands of dollars. So I always tell the guys, don't make the mistakes that I made by not recognizing when you're wrong. The problem that we have right now in this in the space is that there's too many son of a bitches, because that's what they are. Too many son of a bitches that learn how to trade in the bull market, have no idea how to trade a bear market, have no concept of what a bear market is, and they were able to scam a lot of people online. So you have these, what I call 18 to 24-month old traders, right? That all they knew how to do was, buy the dip, that are getting burned. So if you're a new trader coming into a bear market and you don't understand the concept of what bear markets are, and you don't understand fundamental analysis, and you don't understand what tariffs are, what CPI, PPI, University of Michigan sentiment is, if you don't understand what having negative GDP means, if you don't know these things, then don't trade this environment. Instead of trading it, learn, so that when the market does reverse and there is an opportunity for you to go long, you can trade that market. But in case you're ever in a situation where we have another 10-point correction, you know how to trade it. You know how many people come to me and they say, I don't know how to trade puts. Well, if you don't know how to trade puts, then why aren't you trading calls on bullish, bearish positions? In other words, why aren't you trading the UVXY? Why aren't you long the VIX? Why aren't you trading low beta stocks that are something that you seek safety in? Go ask the average, like I say, 18 to 24-month old trader, hey, what's beta? And they can't explain to you what beta is. What's a high beta stock? They have no clue. So, my advice to these guys is learn. Educate yourself. Stop thinking that ICT and that smart money concepts and all these things are going to change your life. A silver bullet, whatever the hell that is, none of that crap is going to change your life. Maybe it does for some people, but what's going to change your life is knowing how to trade in the environments that we're currently in and knowing what instruments to trade in these environments. Because certain instruments are better for certain environments, right? Debit spreads, options, equity, futures. Maybe it's better to trade Forex. But no, that's not what's happening. What's happening is you have this invasion of these young kids that don't want to learn because they're coming off this new phenomenon that's called, funded these funded companies, because they're not even real prop firms, because prop firms don't exist anymore, right? So it's these funding companies that they just feed the vice of the person, right? So these new kids don't really learn how to trade. They just learn how to catch momentum.
Yeah, and just to speak on the prop firm thing, right? That is a phenomenon that I've seen pop up on YouTube over the past few months, where guys that I've been following for the past few years that put up stock market, trading material, things like that. All of a sudden, they're all doing this like clickbait thing for these various companies like Apex, right? All these different quote unquote, as you said, prop firms, to get these funded accounts. And in my opinion, they're not really, I don't know, they're not really the best way to go, because you're just essentially you're playing a game, right? You're trying to hit a certain target. And I'm not sure if it's necessarily cultivating the best trading discipline, routines, strategies, right? It's like you said, you're just trying to capture momentum and see if you can hit that threshold as quickly as possible, right?
Yeah, I mean, again, the problem that we talk, and I'm going a little bit on a rant here because we were talking about something else and then we ended up here. But, the thing for new traders is that they need to learn how to trade with their own money, right? They need to understand what it's like to lose hard earned money. Spending $30, $40, $50, $100, $200 on an activation, whatever the hell it is, that doesn't teach you the right habits. Don't get me wrong. Have I been a victim of funding companies? Absolutely.
Yeah, me too.
Have I gone through a shitload of money, getting funded, blowing an account, getting funded, blowing an account, getting a payout, getting a few payouts? Yeah, I have, until one day I just made a decision. I said, listen, what am I doing here? Because every time I would trade on these prop firms, because of my style of trading, I wasn't being successful, because these funding companies don't allow you to look at bigger picture trades. They only allow you to be in positions for the length of the time that the market is open during the cash open, right? Obviously, you have that 1 hour gap in between from 5 to 6 on futures, where you can re-enter the position. But if younger, inexperienced traders could really understand that if they were to grab the money that they're spending on these funding companies and just open up their own futures account and trade micros, they would be more successful. If more people would do that, we would have less and less of this drama of all these newer traders that are complaining about how they feel that they suck. Well, no, you don't suck. It's that the way that you're trading has been designed by these firms to stack against you, because you have rules that are not realistic. You have goals that are not realistic. You have to wait a certain amount of days to get paid out. And then it just becomes one of those things where you can have one bad day that ruins 10 days of great trading. And one day doesn't ruin 10 days. You know what I mean? But in that space, it makes you feel like you're a failure, which is why our community at Taylor Trades, we are not advocates for any of these firms. We're probably the only trading community that doesn't have an affiliation with anybody. And believe you me, we've been approached by all of them, because we know that that just promotes bad behavior.
Yeah, it just it promotes bad behavior. It really embeds poor discipline, poor habits, things that in the long run are not going to help you be sustainable or consistent, in the market. So, um, yeah. So, just kind of switching gears here, JP. So, last week, typically we do shows on Sundays and Wednesdays. We did not do a show on Wednesday, unfortunately. My co-host Ethan's been sick. One of the things that we planned on talking about, of course, uh, is the Fed rate decision and Jerome Powell, as we like to call him here on Stonkcast, Daddy Powell. His speech that he gave, and I would love to just spend a couple minutes kind of getting your take on it. Basically, what I saw from my standpoint, obviously we weren't going to get a rate hike, rate cut. Nothing there was out of the norm, right? But from the standpoint of him actually talking, which in my experience is really what moves the market, it's not the 2 p.m. Fed rate decision, it's the 2:30 Powell speech, right? And he talked about how he brought back that term that he loves to use, right, as it relates to the tariffs being transitory, something that he used a lot back in the pandemic time, which of course that did not seem transitory at all. Inflation went as high as what, like 9% or something like that in 2022. It was pretty high. So the fact that he's using that again, he's kind of downplaying tariffs a little bit, I feel like gave the markets a little bit of a I'm calling it a dead cat bounce is what I still think we're looking at here. But I would love to just spend a couple minutes. I know you focus more on the fundamentals. I know you pay attention to bonds and things of that nature. So what did you make of
Well,
Jerome
well,
Powell?
well, I was forced to really adapt and learn a lot about when we talk about from the fundamental analysis side of it and understanding even in the early 2000s, how important the Fed was. You know, without giving you a whole spiel of my entire conspiracy theory on everything that's happening, I'll just tell you this. You know, we had a December projection that I think on GDP was 2.1%. And if I'm not mistaken, now the projections are 1.7 in growth. And he was very adamant about that, you know. Um, and we talk about tariffs and how they can affect GDP and CPI and PCE and all that stuff. Listen, none of that matters to me anymore at this point because it doesn't matter what Powell says because he can sway the direction in any way. But the market already understands that we are in a situation that is unsustainable. Um, he literally brought back transitory as
I thought
a
that was so interesting.
he brought back the word transitory into the conversation, something that he hadn't mentioned in a while.
Long time. Yeah.
And he continues to talk about the strong labor market and how the economy is doing fine. Okay, if that's the case, and if that is really the case, and I really don't believe that the numbers are really showing us what's truly happening. If that's really the case, that the economy is fine, why is it that every day I wake up and I look at the jobs number, or I look at the jobs reports, or I look at the layoffs, more and more Fortune 500 companies are laying people off? Why is it that Bank of America is closing more branches? I posted that article today. Bank of America is closing more branches. Why is that happening? Why is it that Morgan Stanley just fired 2,000 people that weren't traders, just from the retail side? So if everything is fine, what if everything is fine, why are these companies letting people go? They're letting people go because they're either okay, they overhired after COVID, which I don't believe that to be the case. The reality is that the bottom line of the profitability of these companies are affected. They've gone down because, yes, even though they tell you that inflation is only up 2 or 3, whatever percent it is, inflation is actually up 27.5% from 2020. I might be off by a couple of percentage points. I don't know anybody that's making 30, 40% more money since 2020. And I live in Palm Beach. When we talk about what he said and what can come from his conversation, you know, Who really cares at this point? Because the only thing that matters right now is what's going to happen on April 2nd, right? Which is a reciprocal tariff day. That's the only thing we care about. We already know that Powell isn't going to cut rates. We know he's not going to raise rates, at least not now. We might have one rate cut. We might have two. We look at the dot plots. Nobody cares about that right now. The reality is this: Americans are hurting. We are making less money. We are at the highest level of debt, of consumer credit ever. It is a ticking time bomb. The amount of 30, 60, and 90-day delinquencies continue to tick up. You know that outside of my trading, my full-time trading, I'm a real estate broker. I have my own firm. I can see the amount of foreclosures that are happening in Palm Beach. I live across the street from from Trump National. I live across the street from the Bears Club, where Michael Jordan and Wayne Gretzky live. Okay, there isn't. I people where I live are extremely well off. If everything is fine, why is it that when I drive down my street on Prosperity Farm, coincidentally it's called Prosperity Farm, right? There is a sign on every other block for a house for sale, and these are waterfront properties. And it's not that they're selling it at the peak, because guess what? The value of my property has gone down 10% in the past year. Those properties are losing value as well. So things are not fine. Um, what
Yeah.
do I think? What do I think about the whole Powell situation? I think that Powell is at that point where it's the Fed against Trump. And Trump wants to cut rates, and the Fed, who is the Fed, understands that. We can't just do that because the numbers are telling you that everything is fine. There hasn't been a collapse in employment where suddenly it shoots up to 6, 7, 8%. Then we got a problem. On the contrary, it's remaining steady. So this is not something that, you know, we can sit here and gauge anymore. The Fed is telling you that everything is fine because the numbers are telling you that everything is fine. They're saying it's fine. So end of story.
Yeah. It's interesting too because I feel like what I would imagine Jerome Powell and the Fed are really looking for to kind of signal, hey, we can do the rate cuts. They want to see, they don't want to see kind of like an uptick, I would imagine, in, unemployment. I know Powell was asked a question about that last week on Wednesday, about how he thought, the federal employees that are no longer in jobs, how long it's going to take for that to reflect. And similar to the tariffs, right? He was like, look, we don't have enough data yet on that. It's going to be a little bit before those things trickle in. And I think those would be the things that, would put them in an easier position, I guess, to, cut rates. I think we were all expecting 3 rate cuts before the beginning of this year. And I think now it's 2, if I'm not mistaken. Looks like a very high probability we'll get one in like what, June, July. Is that fair?
Yeah, yeah, I believe it's July, or I might be drawing. I might be incorrect on that, but one of the things that you have to really understand, and I know his speech almost inside out because I almost record little snippets of what he said. You know, and he said that the rate cuts were left alone because there's a lot of economic uncertainty, right? And the Fed, and he said the Fed wants to see how the economy. What was it? He said the Fed wants to see how all the economic forces interact before making a big move. Well, we already know what's happening. You have all of these federal workers that got let go. You have all these major institutions letting people know. You know unemployment's going to tick up. You can't tell me that everybody that lost their job is now a waiter. What is it, Longhorn Steakhouse? Or at a Fridays,
Yeah.
you can
Yeah.
only, what are you going to tell me that, let's just let's invent a name. Let's call him, I don't know, Andy Dame. I just stole the Notre Dame from you. Andy Dame. What is he going to start an OnlyFans? And he was a financial advisor I don't know, at Stifel.
Right. Right.
So that's the thing. So do I see 2 rate cuts? Probably. Could it happen? Yeah, maybe. But as long as the economy remains strong and the labor market continues in the path that it is, and the numbers keep saying what they're saying, rates will remain the same. That's all I got to say.
Yeah, yeah, it's definitely an interesting time. There, it's like you said, there's definitely a tension, right, between Trump and Jerome. Obviously, Trump wants the rate cuts. Jerome's not there yet, and it'll be interesting to see in the coming months how tariffs play an impact on the overall market.
I mean, uncertainty is still alive and well, and
Yeah,
that's something that you just have to accept. And as long as there is uncertainty on the markets, we're going to be in this trading environment where the VIX one day jumps to 30, the other day it goes down to 19, the next day it's at 25, and that's what causes unstable trading environments for day traders, right? Because if you were a swing trader or were a bigger I'm sorry, a longer forecasting kind of retail trader, you would know that, hey man, things are getting a little toppy. We know tariffs are coming in. This is a little bit of a scary environment. I think I'm going to start taking some short positions, or I'm going to start taking profits on some of this high beta stuff and look at rotation, because it's going to get scary. And you should be able to see that stuff as a trader, you know?
yeah, for sure. Yeah, and I mean it's definitely I don't know, the environment we're in. You just got massive moves up, down. You got the VIX just a hair below 20, and you're going to get a lot of uncertainty, as you just said. I just wanted to share real quick. I mean, if we just look at futures right now, I mean, to your point, right? You got wild moves. I mean, look at the freaking E-mini. We're up 50 basis points, right? Now, obviously, that could change in the morning, but I'll be really curious. Just taking a look at SPY here. I want to pull up the daily chart for this because we're still below the 200-day. JP, I marked out, I don't know how you feel about this level, but I marked out 565 just based off of, last year around summer, right? We're still below the 200-day. And here on Stonkcast, we've kind of, I've been using this as really a barometer just to kind of simplify things more to the point of what we were talking about earlier with technical analysis, things like that. But, I would love to get your take on kind of where we're at from a market standpoint as far as, is this a dead cat bounce? I've heard some people saying, this is the bottoms. Like that seems ridiculous to me. I'm in the camp that we're kind of entertaining a dead cat bounce at this point, and I'm expecting this thing to roll over again soon. But I would love to get your take on, what you foresee, I guess, for the week
So,
ahead or things you're paying attention to.
so to be very honest with you, I don't even look at SPY. I look directly at the index, at the S&P. And
SPX?
yeah, and I
Yeah,
make
here
my
you go.
decisions of what's going to happen based on that.
Yeah.
If if you're a smart trader, you know what JPM's collar is, and the JPM collar has been literally to a T. The mid collar on JPM was 55.65 on the S&P, and we're holding inside of this range on the S&P right now, where it's trying to decide if it's going to break below the 55.65 level and go for 5,500 flat. I actually have a key level of 55.0465 on the money. And if it breaks below that, I mean, it's all hell. All hell can
Yeah.
break loose from there, right?
Right.
Because not only are you trading below the 10, the 20, the 50, the 100, and the 200 SMA, you're now having to look at the possibilities of having a full extension on the S&P all the way down to 5,200, right? Or around 5,250. Because yeah, there's minor supports at like 5,400 and all that stuff, but let's just be realistic. A couple of weeks ago, we were trading at like 6,100 on the S&P.
Seems wild now.
we're at what I think we're at 56, 67 today, or wherever it is that we close in the 5600s. I mean, that's almost a 500-point move. Are you telling me that it's not realistic that the S&P can drop another 300 points?
Well, and keep this in mind too, right? I mean, the RSI was obviously pretty extended, right? It was oversold territory, but it's had
True.
time to cool off. It's had time to cool off, so I could definitely see it.
It's right in the middle. It's in the middle on the daily. It's just right there in that area where, you know, could it just be another just wick all the way down? Now, I've been talking to a lot of people about this trade. I think that the S&P is going to sideways trade for the next 2 weeks until April 2nd. And I wouldn't be surprised if we start to form like a little bit of a rising wedge on the daily on the S&P, and come April 2nd, we have the biggest, ugliest red day you've ever seen, because that's when tariffs kick in. Again, when you look at the bigger picture, and I always say to people, draw your major levels. That's it. Don't overcomplicate yourself. We know that the 5565 level is very important. We know that. And we know that 5,500 is key. If we start to break down and we take out 5,500 on the S&P, the next major support is at 5,402. It's clear as day. If you go and you draw a little line on it, you can see it. It doesn't have to be exact. It's right there. And if it breaks underneath that, it gets really, really, really ugly, because the next decent sized wick is at 5119, but there's a little bit of an area that you could say that maybe we pause at, which is around 5250. These are my levels. They're not exact. They don't have to be perfect. You know what I mean? But these are my levels. I don't care what anybody says. These are my levels. So is it possible that the S&P going into tariffs has another major sell-off? Yeah. Do we have some major areas at 55, at 54, and at 52? Sure. But look at what we're talking about. We're talking about trading below all the major SMAs on the daily, right? And we're talking about downside projections. We're not talking about upside projection here. Are you sitting here telling me that you comfortably feel that the S&P can get back above 5,800 right now? With all the major moving averages blocking it, you got the 200-day, I think is trading right now at 5750, if I'm not mistaken. And I think that the 20-day SMA on the daily SMA is like at 5750 as well. I think that I think there was even a 2200 cross to the downside. So yeah, could we possibly have a little bit of a bounce here because we're holding above the 10-day? Absolutely. Could we come back and retest the 5700 range? Yeah, cool beans, man. But I can't feel comfortable being bullish in an environment where I haven't even made a new high, a higher high.
Right. Yeah,
And if you look at that daily, I mean, it's not there yet, but it's getting there. This could easily turn into an H.
yeah. Yeah, it does. It just doesn't look great. Like even Friday, right? I was watching the market and we were looking pretty steady. Past couple days we've had these rallies of sorts, but even that, I'm like, I don't trust it, man. I took a very, 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 very light position to the call side in Tesla just because I saw this setting up on the daily. But believe me, I'm getting out of this tomorrow regardless because I just don't trust it. I don't trust it. And it's like you said, like, I mean, there's really no confidence, no conviction to be long right now. Everything is below major support, major SMAs, and things just look bearish, man. They just look bearish.
One of the things that I talk to my community and that I chat with my business partners all the time is that, you know, when all you do is you're used to trading Amazon, Tesla, Nvidia, AMD, and all this crap, you start to forget that in these kind of markets, there's things that trade beautifully that you can catch. But everyone is so caught up on these zero DTE options that they it's almost like they forget that there's other markets. But when you're telling me how I feel about what can potentially happen, and I'm a guy that likes to put on heat, I don't like the market in any capacity right now. I didn't like it at, listen, I'm a bear. I am a perma bear. Everybody knows that. I want the world to end. I want the apocalypse. I want the zombies. I'm that guy. Everybody knows that. Everybody that trades with me knows that. I am doom and gloom. I hated the market in October. I hated the market in November. I hated the market in December. And I really hated the market in January, right? And when you're used to being a perma bear and you just want things to go down because the PE or the market is overvalued, and you don't understand why Nvidia is trading at 150 because it doesn't make any sense, you're just hoping for the end to come. And the honest to God truth that that's not a great way to trade. But when you've lived through as many economic collapses as I have, I was part of the dot bubble, the dot com explosion. I was there in 2008. I was there in September 11. I've been there for COVID. I've been there for everything, right? Um, it just takes one moment in time to eradicate all your gains. So think about this, right? For the people that were long September of last year, okay, on the S&P at 5,400, if they weren't to exit their position, right, they almost came back to 5,400 on the S&P on March 13th. And it took from September to February to get to that 6145 high on the S&P. And it only took 1, 2, 3, 4, 5, 6, 7, 8. It took 2.5 weeks to erase 5 months of profit.
Jeez.
So you sit there and you say to yourself, do I think that this is good? This market's going to bounce? Give me a reason for it to bounce. Why? Why should it bounce?
Yeah, it's definitely been the take of Ethan and I for the past couple of weeks here on Stonkcast is like, it looks bearish. It looks bearish. And, we're not gonna, I don't know. I feel like it would be really easy for clickbait purposes or what have you to sit here and say, this is the bottom. We're going to go up, but like, that's not realistic and it's deceiving and it's not accurate. And so far, we've been saying bearish. I know you guys, you and Tailored Trades, right? You guys have been saying the same thing. And look,
We've been bearish. And again, do we have day traders? You bet your sweet ass we have day traders. But our long-term position, we've been bearish since I believe some of the guys were bearish since the second week or the first week of February. And I got guys that have been sitting in position since the second, third week of February that are just now taking some profit on those shorts.
Yeah, they're sitting pretty.
They're sitting pretty. And let me tell you something, they didn't do much work. They didn't have to do much work. The work was already done for them. They didn't have to do anything, because guess what? They're not trading futures. And if they are, they're trading it on their own accounts. And if they're trading options, they were trading 45, 30 days out. They weren't trading zero DTEs. And the guys that were trading zero DTEs, guess what? Those guys also had long dated puts, So between you and I, again, from the people that I talk to and the guys that I know, and I follow some really, really smart guys. And like I said, when my mentors that were Wall Street guys are telling me that they're not touching the market and they're busy golfing on a Tuesday, when my guys are golfing on a Tuesday, I'm going to stay out of the market.
Right.
I'm going to stay out of the market. But I will tell you this, there's a bull market everywhere. And we all know that, right? And what we've been able to do is we've been able to find some great trades in this market that have been very bullish and that we've made a lot of money on. And I'm happy about that because I've shown a lot of the people that normally are questioning, I don't know how to trade these bearish markets. I said, well, listen, let me show you some bullish setups, some things that you could have made a lot of money on. And they're like, there aren't any bull setups in a bear market. Really? That's because you've only been trading for 2 years.
Yeah, and I know we were talking about a couple weeks ago the VIX, right? And I shared that with our show here. Some of the VIX calls I was able to get into and get something out of. But I mean, that is an example for me, like only trading 5 years. Like if we go back to 2022 when Russia invaded Ukraine, right? I mean, I was essentially just a perma bull at that point. I was so new to trading. I didn't understand like, hey, there's some other ways that we can make money here, even in a bear market. So I mean, that's a great example, right? The VIX. I know you talk about that a lot.
I mean,
That's your
I
go-to.
think I was one of the few guys that I think I gave the bottom of the VIX before it rallied. I told people, I specifically said, watch for a break and close on the VIX above 1758. And I remember telling my group, I said, guys, some son of a bitch is buying $25 calls on the VIX. I don't know who it is, but it's a lot. And we're talking millions of dollars. And I took that trade and I was sitting. I didn't take another trade for like 2 weeks. I was just watching my VIX calls just go nuts.
I
You know
mean,
what I
this was
mean?
nuts.
This was great. And guess what? And everyone's like, oh my God, how did you have that? I'm like, I draw my levels. I've been trading for 20 years. I'm a student of the VIX. I know what the VIX does. And the VIX was telling me that it would have to go long. And when I'm seeing premiums getting swooped up, right? I'm sorry, calls getting picked up on the VIX, and that premium is picking up, I want to be on that side of the trade. You know what I mean? I want to be on that side of the trade because guess what? I'm putting in a very little amount of heat to get a huge potential. You know what I mean? So if I'm wrong, I'm wrong. But do I have a problem putting in a couple grand or a couple $100 and then watching my VIX trade just go parabolic and feeling like I'm a genius? Well, I'm not a genius. It's just that the way that I trade and my signals are telling me something. So guess what? I'm going to follow what my signals are telling me, you know? So until the VIX gets back into the range that I want it to get, I won't be long because I don't want to trade the VIX at 19 or 20. I don't want to trade the S&P at 19 or 20 because it's holding support and the VIX can just spike right back to 25. And am I going to be the asshole that's holding on to Tesla calls because it looks like it's going to bounce? No, come on, man. I'm tired of thinking that things are going to happen. I don't think anymore. I let the screens and price action tell me what to do.
Right. No, that's well said.
I don't anticipate. I go with it.
Yeah, that's well said. And yeah, when you're trying to anticipate what's going to happen, at least in my experience, you get your face ripped off, so it's not really worthwhile.
Yep.
But I don't want to sound redundant, right? Because I know you and Kevin have covered a ton of this already. But just generally speaking, right? Going back to the idea that in a bear market you need to be looking at other things, which by all measures right now we are in a bear market. What are some of the sectors, if you could just touch on a couple sectors that you're keeping an eye on, right? You may not be actively trading, but some things to be generally aware of during this present time.
Well, I talk a lot about my S&P tactical watch list, where basically I have every single spider on one watch list, and I keep that on my screen. And I mean, I watch the XHB, the XLK, the XLP, the XLV, the XL. I watch them all. I have them all charted out, and what I've been seeing is what ended up happening, and it actually did work out, was that as the market was looking for safety, it found a home in the past couple of days in healthcare. And if you look at the XLV, it held that 143 area, and it popped all the way to 147. And I had been watching the healthcare sector for a while because people were looking for safety and they were parking their money at in the XLV. So I am watching the healthcare sector because remember, a lot of the stuff inside of that particular area pays a nice dividend. So right now, people are parking their money wherever they can find a good dividend return, right? So I've been watching healthcare a lot. I had been calling I mean, people were judging me about this, but I told everybody the XLE at 84 is a buy. And look at where the XLE is right now. It's trading
92.
92. I told everybody that energy was going to be one of the leaders this year because it got beat up the previous year. And XLE, I mean, I gave out an incredible trade on the on XOM. And I still think that energy is going to have a decent year. You know, another thing that I've been watching is utilities. Utilities has been catching a bid. I was really happy to see utilities finally bounce off that 200-day SMA and make that move to the upside.
Looks good.
Yeah, I mean, I've been watching the XLU, and then there's other stuff that I'm watching that I've been keeping an eye on because I like to look at sector rotation and how it works and what it starts to do and where people are parking their money. Like, for example, I'm not sitting around here right now saying, "Oh, let me go put my money in consumer discretionaries." I mean, this consumer discretionary sector is getting murdered. You know what I mean? But just because it had a nice candle, that's the XLY, by the way. Just because it had a nice daily candle on Friday, suddenly I'm going to rotate into that? Absolutely not.
Yeah, no, it's I could see how people could be deceived by this, right? They might be looking back here in July. Oh, this is support now. It's going to bounce. But, I agree with you. I think it's a risky bet.
Yeah, the XOP as well. So, I sound boring and I sound old, but, I'm a big energy trader. I love to trade oil futures. I love trading nat gas. I love that sector, and it's been doing well. But outside of sectors, what I have been doing is, as you know, excuse me, I'm very good at finding stuff that no one else does. For some reason, I just happen to have that gift, and everyone knows that. It's like, oh, when JP puts out certain trades, it's almost like, shut the fuck up and just take it because it's stuff that we've never heard of. And it seems to be making some noise. But, I put out a trade last year that's gone into this year that I'm getting messages from institutional guys on Twitter telling me, how the hell did you know this? One of the things and that ticker symbol is LB, Lambridge.
Yeah, I remember you talking about this one.
I gave the Lambridge call at 54 on the equity side all the way back when. And I rode that bad boy all the way to the mid 70s.
Back in December?
It was an equity trade, 3 months ago.
Yeah. Okay.
And it just happened to be that coincidentally, a couple of days later, Goldman puts out the buy rating on it.
That always helps.
That always helps. Sometimes it helps. To live in Palm Beach, if you know what I mean, right? So
yeah.
So we caught that Lambridge trade. Then I also I gave out for earnings. I said I'm buying the May $90 calls on Lambridge. I believe earnings were like 2 weeks ago. And it was a miss on the earnings, but it wasn't a miss by a lot. It was actually, if you read the report quarter after quarter, they've been making money. But of course, the street sees a bad read and they crush it. Right? I held on to those calls. What was the high of that contract? Ask me what I bought those contracts for.
What'd you buy them for?
I have $1.68. Guess what I sold them at?
How much?
$4.50.
That's a nice return right there.
And I sat on that trade. Count the days from earnings. Almost
from earnings.
Almost 2 weeks.
Yeah, that was like 3.6.
And I specifically said it's going to go to 83 and then it's going to come back down, but my ultimate price target is 91. You know how much shit I got from people because they missed earnings and the messages I got saying, you made me get into this and it's dying. And I said, I didn't make you get into anything. I just told you that this is what I know about the company and what it's going to do. And then guess what? These sons of bitches covered their position. And I'm over here sitting pretty with Kevin, laughing my way to the bank. Because here's the thing, right? When you're a trader and you believe in your trade, there's nothing that can get you out unless it breaks below your level.
Right.
If
gets
Lambridge would have broken and closed below 58, I would have gotten it out because the next level was 51. Did it ever break and close below 58? No. So why the hell am I going to get out of my trade?
Right. And that's a way too that you stay kind of sane, right? Instead of having all this anxiety, like you have a predetermined plan. We always talk about plan the trade the plan here on Stonkcast, and that's exactly what you're talking about. There's no stress involved. You know, if it goes to a certain point, you're getting out. If it doesn't, you're staying in. It's very simple.
Yeah, but I'm down 30% on the call. What the hell do I care? If it breaks below this level, I am out. But I know in my heart of hearts, deep inside of me, that sounds kind of weird when I say it like that, that my trade is going to work out. Now everybody thinks I'm a genius. And I'm like, no, it's not about being a genius, it's about understanding what you're trading, knowing what you're trading, and having your levels drawn out. Look at the market, how it's been falling apart, and look at what Lambridge is doing. Is that a bullish setup in a bearish market? Yes or no?
Yes.
So you're going to tell me that there's people that only learn how to trade in a bull market, right? And they don't know how to trade puts or how to short the market, because nobody really knows how to short, by the way, like
Yeah.
actually short markets. They don't know. You have to know what the hell shorting really is. You're telling me that you can't sit around there and do a little bit of research and maybe find a company called Lambridge and find out what they do and suddenly say, holy shit, look at all the people that are behind it, and take a hell of a trade and sit in it for 2 weeks without having to trade zero DTE and not stressed out? Would you rather be this trader or the guy that wakes up at 9:30 in the morning every day to look at SPY and try to catch a 50% run on something that 2 seconds later gets smoked and you're down negative 70?
Been there. It's very stressful. I don't recommend it.
You don't. I'll give you another one. Kratos, KTOS.
Yeah, I was looking at this one too. I remember you talking about it.
I was the first one to take this trade. I told everyone 25, it breaks, you shut up and you take it. I bought the January 26 $30 calls. Look at where Kratos went to. And I had a $30 price target on it.
35.66.
I had a $30 price target on it, but that's all the way back in January. We took this trade later in the.
Oh, okay. You took it right in here, right?
Yeah,
in February?
Exactly.
Yeah. So it looks like it hit like 32, almost 33.
We had a $30 price target on it. I ended up selling it when it got to $29.87, right where you're hovering above it. Because that I waited that wick when it came down, and the next wick we got that ugly red doji.
But yeah.
You know, that ugly candle, and I said, you know what, I'm out. And then it went ahead and it made a move. I went all the way to 33 or 34. Let me ask you a question. Is that a bullish setup in a bear market? So okay, are there bullish setups in a market that is pushing down?
100%.
Is anybody talking about Kratos? Now they are. Because suddenly all these contracts started coming out, all this information about the Iron Dome that the United States is going to build. And guess what? Kratos is one of the companies that's going to be behind it.
Yeah, that is interesting.
We had that information. It was literally given to us, not an inside trade, because that's not what I'm talking about. It was on the news. It's just you have to find it.
Yeah. Sees growth potential as tactical drones, hypersonic, gain attention. Yeah, I mean.
And these are the things that I like to trade, and these are the things that I like to be on. So is Lambridge boring? Is it sexy? No, it's not. It even has a horrible name, Lambridge.
Yeah, it's not on Wall Street Bets. Let's just say that.
Sexy stuff. I don't need to be sexy. I'm sexy. I don't need to trade. Oh, I got to trade Tesla. I don't need that, bro. I'm cool trading boring shit that no one's paying attention to, because when it starts to get attention, I'm already out. Because guess what's happening? The guy who's catching the trade now that has the attention is getting my leftovers. And you bet your ass that if I'm selling my position, I'm selling it to stupid money. You know what I mean?
Right.
I'm not selling it because I'm scared. No. I'm selling it because I know what I wanted and I got it. I wanted 30 on it. I got 30. Do I care if it goes to 50? Is it going to suck? Yeah, it's going to suck, but I'm okay with it. I wrote it for 10 fucking points, bro.
That's awesome. Yeah, this is an interesting company for sure, especially with the contracts and things like you were mentioning. I'll be really curious to see over the year
Didn't I?
what
You remember
develops.
that I gave you a phone call and I said, "Look at Sentinel,"
Yes.
and I gave you the Sentinel trade, right?
Yeah,
And we literally caught the bottom of Sentinel.
that's crazy.
We caught that wick. We caught that wick, and we rode that. And I told you, I'm selling at 20. Where did it go to? What was the top of that wick?
Like 1995.
And I text you, and I said, I'm out.
Yeah. Yeah.
And I specifically told a couple of my trading buddies, I said, I am not holding this past $20 because it's going to run into the 20-day SMA and it's going to have a hard time closing above it. And guess what it did? It went straight up to the 20-day SMA and it couldn't close above it. And I got the hell out.
Yep, there it is.
So again, we talk about how to trade. Here's my entry. Here's my exit. If Sentinel would have broken and closed below $17, I would have taken a loss on the trade. My entry was around 1780, 1790, something like that. I had a $3 price target to the upside. If it would have gone down, my stop would have been about a dollar below, a dollar something. So my R to R is great.
No, it's excellent.
And my contracts were, I think, 3 months out.
Yeah, it's funny. It was funny when you texted me about that. I was like, "What is this company?" JP's telling me. I've never even heard of this. So funny.
And that's the stuff that I like to trade. And I know that we're going a little bit all over the place. And when people hear this, they're probably going to laugh. They're going to be like, "These guys are like, how many Celsius did they take, right?"
Yeah.
But
Well, speaking of that,
well, the thing is, it's like when we start talking about trading, we start talking about things, and when you're enthusiastic about what you do
of
because you
course,
love it, you could talk about it for hours. And we
of
go
course.
from Jerome Powell to how did you trade, and you know how did you blow $50,000 on Uber, stupid company?
Yeah.
And the thing is, when we all come back down to it, the point of this conversation is there's no format to it, but if you piece it together and when you listen to it, you're gonna say, "Holy shit! Here's a guy that's 41, going to be 42 years old, that's blown a shitload of money, who's made a lot of money, who's now now doing this full time outside of his real estate brokerage firm. He's not talking about Tesla. He's not talking about Nvidia. He's not talking about zero DTEs. He's literally incorporating what he said about being a longer vision, longer term trader that likes to sit comfortably without stressing out. That's what he's told us. And he's showing us trades that are the proof is in the pudding.
Yeah, so true. I mean, there's multiple ways to tackle the market. You don't just need to be in the quote unquote sexiest thing, as JP is shown us here. There are a ton of things to trade. There are bullish setups in the bearish market, and vice versa, right? It goes either way. And I know we've been going kind of long here, JP. I want to respect your time, so we'll get out of here in a minute. But I
No,
couldn't
I mean,
help
I
but
still got time if you want to keep going, so don't worry about that.
okay. Well, I couldn't help but pull up Celsius when you mentioned that because I took a look at this chart on Friday and I took a very, very light call position in it because I couldn't help myself with the way this daily chart's setting up. I would love to get your 2 cents on this though, from your perspective.
Um, I'm going to be honest with you. I don't trade Celsius because I have had a really bad experience with it. So I've been trying to catch the breakout on Celsius since January of this year.
Okay.
Um, I I'm going to be really honest with you. Listen, it's a company based out of Boca Raton.
Yep. Not
Okay,
that far from me.
exactly. So I have had a bad experience with Celsius. I had some information about some partnerships that they were going to do with F1 and with and with UEFA and with the English Premier League, and that news never came out. Something about a sponsorship for Abu Dhabi, the F1 race, all this stuff that they were gonna get involved with Sail GP or what is it called, Sail GT or Sail G, whatever it is, the the new this sailing it's like it's like the F1 races but for sailing.
Oh,
I think
okay.
it's called Sail GP. That's what it's called, right?
Okay.
All these partnerships and all these things that never came out. Listen, you're betting that an energy company, an energy drink company, is going to be extremely profitable, and it's a space that's not unique. We saw it in Monster Energy when it first came out. It went parabolic. It was insane. You know, we all thought Red Bull was going to be incredible and it would eventually IPO. I don't even think it ever IPO'd in the European markets. Listen, none of this stuff is good for you. It's unhealthy. You know,
Yeah.
and now that you have Robert Kennedy Jr., as a Secretary of Health, I wouldn't be surprised if there's more investigations done into these type of energy drinks. So I don't want to
That's a
be
good point.
I don't want to be long stuff that can eventually be scrutinized by the government and you could get screwed over, right? Because all it takes is one investigation into Celsius to see what the hell is inside of it. And then before you know it, there's some type of, cancer producing ingredient. Celsius goes to $1.
Yeah, and I mean, like, look, I've never had a sip of Celsius. I'm more a coffee guy. But but I mean, you and I both know, JP, living in South Florida as we do. I see everybody with this stuff at the gym, in office. Everyone's got their hands on it. You know what I mean? So
Yeah,
it's
but
definitely got some hype.
but you're probably too young to remember this, but there was something called Sobe drink back in the day. It was like a lizard on
Yeah, yeah,
yeah.
I remember it.
Everybody was walking
What
around
happened to
with
that?
that. It died.
Yeah, yeah.
So these kind of things to me are a novelty. Can you catch a great trade on it? Is there a possibility that it can break out? Yeah, but
I'm
I
looking for
don't.
the 200-day moving average personally. This is not a long-term investment. I'll probably sell this tomorrow or Tuesday at the latest.
Yeah, like I said, I don't like trading these Wall Street bets, internet friendly kind of stocks. And don't get me wrong, I wanted to go long on this when I heard the whole situation about the kind of money that they were going to generate off these sponsorships and all that stuff. It never happened, and I never touched it again. But if you want to talk about stuff that I'm looking at right now
No, let's do it.
from a very fundamental perspective, and I can explain every single one of my trades to a T. Advanced Auto Parts.
Yeah, I remember you bringing this one up.
Yeah, it's AAP.
That's right. Here we go.
So let me explain to you why I like Advanced Auto Parts.
Let's hear it.
Now, I'm gonna get a lot of heat for this, but just go down this road with me. Do you think that more people currently in this economy are going to hold on to their cars longer, or are they going to purchase new cars?
I think they're going to hold on to their cars longer right now.
Okay. Now, do you believe that the used car market is probably going to be more profitable than the new car market in the next couple of years because of the cost of living? Yes or no?
Yes.
So, would you agree with me that there is a higher probability that these used vehicles or your older vehicle is going to need repair?
Oh, yeah. Yeah.
And
Used cars, you're going to need parts.
And as we all know, depending what vehicle you drive, in my case, I drive a BMW. My BMW is no longer in warranty, right?
Right. Right.
So there are going to be repairs that I need to do. Am I right or am I wrong?
Yes.
So I do believe that the car maintenance environment is going to thrive because there's one thing that you can't afford to lose, and that is your vehicle, because it takes you from point A to point B, right? Let it be from work to picking up your kids to going to the supermarket. So I think that Advanced Auto Parts is going to do very well in the next 1 or 2 years. It pays a decent dividend. It's been beat up like you can't imagine. It's just been smoked, and it's one of those tickers that when you look at where we are at right now, you think to yourself, man, you know what? I really don't. If I'm just a regular Joe Schmo, right? I'm probably going to order my car parts online. Probably some of them are going to come from Advanced Auto Parts, and I'm going to find a mechanic that I can pay to come and fix my car. And I wouldn't even be surprised if people start learning how to fix their own cars, to be honest, you know?
Like back in the day.
Honestly. So I think Advanced Auto Parts is going to be one of those sleepers that is going to do very well. Then I get this whole like, I got mad heat from a bunch of people like, I've never seen anyone fix their own car.
It's because
Okay.
they must live in Florida. I don't know. I grew up in the Midwest in Indiana. We all fixed our own cars, did our own oil changes.
So Advanced Auto Parts, I'm already in this position. I got it at, I think I took these calls at around the $34 range, if I'm not mistaken. I can't remember. Um, but I'm up on the position right now. And if I would have shares, I would be up like $3 or $4. But I'm sitting pretty on my AAP position right now. And again, stuff that I look at that no one's watching, that they're like, how'd you find this? You know?
Yeah. No, especially considering the fact that it hit a 52-week low, right?
Yeah.
Back here on like 3.7. Yeah,
So,
on the 7th. So
and I'm a bottom feeder, so I love
yeah,
I love this stuff. I love this stuff. Why would I
buy low,
not
sell
take?
high.
Yeah, is it sexy? No,
No,
but guess
it's
what?
not.
I'm okay with that. Um,
As
another
long as it
company,
makes money.
as long as it makes me money. Now, another thing that I've been looking at that a lot of people are not familiar with in any capacity, and it's not something that I'm proud to say that I'm trading, but I'm a trader, and I when I see opportunity, I take it. It's a company called Encore Capital Group. It's ECPG. Now you're going to say to me, JP, what the hell is ECPG? Without even looking at what it is, can you guess what this company does?
I was gonna say I was just gonna look it up here on Thinkorswim. Not a clue. Not a
No
clue.
clue. They're debt collectors.
Oh yeah, I know where you're going with this one.
They are debt collectors. They are the primary company that is utilized by American Express, MasterCard, Visa, Discovery to recover debt.
Yeah, they're gonna be getting some action here soon.
So think about this, right? We know that the consumer credit is at all-time highs. There's a high probability a lot of people are going to default. Okay. So what ends up happening is that after 90 days, these bad loans get sold to people like Encore Capital. So Encore Capital goes and they do their job, which is try to collect this money, right? But they collect it at a premium. So what ends up happening is Discovery will write it off as a loss. But if Encore Capital can collect the loss, they get a percentage of whatever they collected, right? Do you think that Encore Capital is one of those companies that could potentially thrive off a complete credit collapse in the United States?
Yep.
Okay, so I've been watching Encore Capital since April 20th of 2020. Okay, I'm sorry, March 20th, 2020,
So for a long time.
which just happened to be around the same time that COVID happened. And what ended up happening right after COVID? A lot of people lost their jobs. Companies were firing individuals in the United States. People were living off credit. And guess what? A lot of people's credits got screwed because they couldn't pay it back and they had to live off credit, right? Guess who thrived during that period?
Yeah, I'm looking at for those on YouTube, this is the 5-year weekly chart for Encore. I mean, my goodness. It was at pretty much a 5-year high back here in was this beginning of 2022. But look at this rise before that, past 2 years. Like you said, right after COVID.
And 2022, suddenly things started to stabilize again. Am I right or am
Yep.
I wrong?
Yep.
And then Encore started to lose money because it's such is life, right?
Yep.
But guess what, man? We're back in that weird environment where consumer credit is an all-time high. You know what? I
What
have
was
no
this
problem.
massive drop on it? Sorry
Oh,
to
yeah.
cut you off.
No, I think this was a
Earnings.
sell-off. Earnings on
Yeah.
earnings.
Yeah. Anyways, go ahead.
I have no problem putting on a little bit of heat on this, knowing damn well that if it breaks below 32 or 31, I'll get out. But you want to know what I think my ultimate price target on this is? 51. And do you know what comes out in April?
What comes out in April?
Consumer credit.
That's right. That's
And what
right.
do you think they're going to do? Do you think they're going to spin it in the right way and say, oh, yeah, consumer credit is the fact that they're using so much credit is great because that means that, people are spending and the economy is healthy? Or do you think they're going to say
Things look iffy.
things look iffy because
They
this
look hairy.
consumer credit is kind of scary? Do you think
Right.
that that's going to be the narrative that Steve Leisman comes out with?
Yeah, I mean, it's just from a technical standpoint, right? It's extremely oversold. So it makes sense. It makes sense.
Again, is this stuff sexy? But am I big braining this stuff? No, I'm not. I'm using common fucking sense.
Yeah, it's common sense. Same with Advanced Auto Parts. I remember when you called me about that one. We were kind of talking it through or whatever, and I was like, yeah, I mean that makes sense. It's all stuff that anybody could look up. But what helps you discover these things, if I'm not mistaken, is having an eye on the bigger macro view, right? And understanding, how some things correlate. And that's the type of thing that anybody can go out and learn for themselves, right?
Do you have to sit around here and like go nuts and like try to figure out, what a silver bullet is or, smart money concepts and all? No, you don't. This is just kind of just sitting there and looking at things from the point of view of like, okay, well, what can possibly go wrong or what can possibly go right?
Yeah.
Same thing when I told everybody. I talked about this in length. I said, I want to be short credit card companies. I want to be short MasterCard. I want to be short Visa. I want to be short Discovery Financial. Sure as shit. Right when I said I wanted to go short MasterCard, 2 days later, it just dropped like a stone. And it just started going down, 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 and down. And the one that got affected the heaviest was Discovery Financial because news came out that their merger with Capital One wasn't going to go through. And that's that day that Discovery Financial dropped from like 165 all the way to 144, dropped 20 points.
That's
Right?
crazy.
But we were looking at shorts on Discovery Financial back in the beginning of March. I
I know you
remember you
guys.
I remember you called me and you told me, hey, JP, I want to go long MasterCard. I said, I'm not touching it. And that became a negative trade for you guys.
Yeah. I mean, as I just had pulled up there, I'll pull back up. I mean, look, it did technically bounce on the fib here, but of late. But yeah, I definitely get what you're saying, and that definitely coincides with the whole theory of look, if you have people defaulting, right? Like you just said with that last trade, that's going to be bearish, right, for a lot of these companies within the financial sector, right, including MasterCard, Discovery, as you mentioned, things like that. So yeah, it makes perfect sense.
I got one more for you. And I know you're bringing up PayPal, but I got something right along these lines. Affirm,
Yeah.
So I personally don't like trading Affirm because it's such a heavily traded retail stock. I'm going to tell you something. During times of recession or during times of economic difficulties, there's two things that start to happen. Number one, credit card companies start to reduce the amount of available credit that you have. So let's say you have a $20,000 credit limit and you're like $7,000 in debt to a company. And then one day you get that email that they're reviewing your account and they drop it down to 10 grand. So suddenly you just lost whatever. You lost an additional 10 grand in credit. Now you're sitting there saying to yourself, shit, what am I going to do? I'm getting screwed. It's happened to all of us. I've gotten a bunch of messages from people saying, hey man, has your credit card been under review? And I go, yep. And it's happening because, as you know, credit card companies are aware of what's coming and they're scared. So they don't want to get deeper in debt. This is where I think Affirm is going to thrive. Oh, but JP, it's a buy now, pay later situation. That's that's not good. That's actually bad because during times of economic difficulties, a company like Affirm, yeah, they're giving out buy now, pay later, but people aren't going to pay it. They're just going to max out their Affirm card and keep falling deeper into the hole. That's where my argument comes.
Well, and look, to your point, I gotta tread lightly here, but you and I know from a personal level, I have insight onto what you were just saying when it comes to, credit card stuff, right? And yeah, I can definitely confirm that a lot of things are getting checked out right now. Let's just say that. I'll leave it at that.
So, with that being said, if you have, let's say, a five, six, two, three, $4,000 limit on a firm, and you need that extra money, and you know that you can't afford to lose that Affirm credit limit because you've already lost your credit card limits, do you think that people are gonna use their Affirm card and not pay it? Of course, you're gonna pay it because they're in monthly installments of $10 a month. So they're not going to want to lose their Affirm card. This is where I think Affirm benefits. I think a firm is going to benefit from the middle class, the lower middle class, and the lower class group of individuals, right? That need that extra money in order for them to get by, that are putting essential needs like groceries or to power and light, their water bill on a firm that they can pay piece by piece until they get back on their feet. A firm will make money, even though they're charging a 32% interest rate. They're going to make money because people are going to need their Affirm. Because guess what? Affirm isn't sitting around checking your credit. Affirm gives you a credit limit based on your spending habit.
And it's got a very nice IV percentile right now too. 32%. Wow. Meaning 32% of the time the volatility is lower than it currently is in the past 52 weeks.
There you go. So I think Affirm is going to be a company that really thrives from a recession. The argument that I have from some of my smart guys are that no, that's not true because they're just going to max out their Affirm cards and Affirm is going to go in default. Listen, dude, the guys that run what is it, Clara? They're smart guys, and they partnered up with DoorDash because they know that people can't even fucking afford food right now.
Yeah. I just saw a headline the other day from I don't know if you're familiar with Dave Ramsey, right? But
Yeah.
he had somebody call into a show who had, I mean, it's just sad. I laugh, but it's sad. But $10,000 in debt to DoorDash, and I was like, how's that even happen? And what you just said, right? People can now just pay up front, or they can get food up front, right? And then they pay it later. I'm like, this is insane.
We're going backwards. So companies like Clara and Affirm, in my opinion, will thrive on a short-term basis. Maybe for the next year or two, I think they'll do well because when consumer credit gets squeezed the way that it will get squeezed because it's starting now, and I know we're going to see the amount of people that open Affirm accounts is going to go through the roof because what does a firm want? Active users, more signups. And in that earnings report, all they want is like, oh, we have 3 million new users. Guess what? That's 3 million new users with a bunch of debt that they have to Affirm. And sure, you can bet your sweet ass that people are going to pay their Affirm card before they pay Encore Capital Group that's harassing them for collections. So yeah, again, this is more of a speculative trade, but I can see it happening.
Yeah. Well, and right now it seems to be hugging that 200-day moving average. I'll be curious to keep an eye on this over the coming weeks. Yeah, very interesting. Very interesting stuff. As far as I wanted to pull it. Do we have anything coming out this week, JP, as far as like the economic calendar?
You just go to Financial Juice and you can see everything that's going to come up. The one thing that I'm actually watching tomorrow, which a lot of people aren't paying attention to, but tomorrow is PMI. It's
Oh, that's right.
yeah, and
9:45.
yep, and I think this PMI number is going to be very, 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 very interesting. And
Can
it's
you
going
just
to
explain for everyone just briefly what PMI is?
Oh God, please don't make me get into
Yeah, just give me the short version.
no, because now I'm gonna go into all the details of everything, and
That's important.
listen, I, I don't want this to become a what's it called help me out here
uh what, like a
another
3-hour show?
30-minute conversation. Yeah, but listen, all this is a serve. It's basically it's the purchasing managers index. That's all you need to know.
There you
Okay,
go. There you go.
and I hate you. Listen, what PMI basically does is it's going to show you what the purchasing managers, right, how they're gauging the overall health of the market. That's pretty much it. And it's the S&P one. So when we get that number tomorrow, and suddenly we sit here and we're like, oh shit, these guys are saying that we're in trouble. What are you just gonna ignore that?
Right.
Are you
Yeah.
gonna ignore it when the purchasing managers index is telling you that there's a situation? You know,
No. And then you got what, consumer confidence. I'm not
consumer
even sure how
confidence is
much.
going to be huge.
Yeah.
Nobody really no. Is anyone talking about it? No. Is anyone talking about the fact that we have new home sales coming out and they're projecting the number to be? I think it was like 680,000. Like that's super low, man.
Yeah, 679 medium forecast, previous 657.
You know, that's bad.
Yeah.
That's
Yeah.
bad. That
Pending
is
home
bad.
sales on Thursday.
You got home, and of course, you got the mortgage applications. I don't think that's going to be up. And then you got a couple of bond auctions as well. So listen, and we got GDP as well.
GDP, we got PCE.
I mean,
We got a lot this week.
you could tell me, you're asking me, is there anything important coming out? Yeah, there's a shitload of important things coming out. And then Friday, you got University of Michigan sentiment, which is my favorite gauge of the market. Come on, man. Come on. You're going to sit here and you're going to be bullish in the market when you have all of this data. Any little piece of information that comes out from any of these reads could be shocking to the market.
It's going to be hard to swing this week. I can already tell.
If you're bullish, you're basically telling me consumer confidence is going to be awesome. New home sales are going to be awesome. PMI is going to be fucking awesome. GDP is going to be better than expected. Pending home sales is going to be awesome. PCE is going to be cool. And then, not to mention, don't forget, you got the fucking wonky Europeans that are also going through important reads. You got PPI in Italy. I think you have the German. I think German PMI is tomorrow as well, or what is it? Is it the German? Something is tomorrow. Oh no, UK PPI is tomorrow.
Okay.
And you got core CPI for the UK as well. Look at what happened the other day that we were, watching the futures. The Swiss decided that it'd be fun to come out with news, and the S&P futures dropped 70 points for no rhyme or reason.
Jeez.
So you're telling me that there's going to be a dead cat bounce with all of this information? Have at it, bro. You know what I'm going to be trading? Advanced auto parts.
Yeah. Yeah. Yep. And then the following week, initial jobless claims, U.S. employment towards the end of the week, April 4th. It's going to be an interesting couple of weeks as far as economic data. That's for sure.
This is where smart people will tell you, stay away. because all of this information that's coming out is the prelude to what? April 2nd, reciprocal tariffs.
Just kind of builds up.
So think about this. If we get bad news tomorrow, Tuesday, Wednesday, Thursday, Friday, and then we go into tariffs, think about the catastrophic drop that we can have if all of this data is crap. So if you're going to be bullish, that means you think that all of this information is going to be good. You think that tariffs aren't going to affect anything. You think that there's going to be peace in Ukraine and Russia. You have absolutely no, quorums over Hamas and Israel. And guess what? Even though I'm a Republican, you have absolutely no worries that the orange man is going to say something weird. So go be bullish, bro. I'm going to keep trading advanced auto parts.
I like it. Well, that was very interesting. JP, thank you so much for taking the time. I know I think we just set a record for the longest Stonkcast episode. I love it.
How long were we on?
Just under 2 hours. Looks like an hour 50 minutes. I love it.
Yeah,
you dropped a lot of great stuff on here.
When you talk about stuff that you love, like Latinas, if we ever have a conversation about Latinas, then it could be a 3-hour conversation.
Oh yeah. Listen, I could talk about the markets all night. It's great. It's my passion. It's your passion. It's why we do this, right? So, I just want to give a quick shout out to Tailored Trades. They are on YouTube. They have their own YouTube channel. They have their Discord as well. JP, cannot thank you enough for taking the time to come on. I hope this is the first of many. Would love to get you and Kevin both on at some point in the near future. Anything you want to add before we sign off?
Yeah, I like that. When I do a lot of this stuff, and even when I was in the music business, I did a lot of public speaking. I was a keynote speaker, like at Amsterdam Dance Event and IMS and all this crap, and I always like to end stuff with something that people can walk away from, because I have a tendency to rant about a lot of shit, and I talk like a sailor, so I really don't care. But the thing that I hate the most is people getting duped. So whoever's listening to this, and if there's anything you can, outside of a good laugh of listening to me talk about nonsense, learn to make your own opinions. Learn to have a broader understanding of how the economy works. Learn to accept that it's okay to be wrong. And listen, we now live in a world where everybody has Twitter, Instagram, or whatever the hell it is you kids use, OnlyFans. And don't let some dude on the internet make your trading decisions. There are a lot of smart guys out there that put out great content and great stuff. A lot of them are really good, but a lot of them really don't know what they're doing. If you're sitting there listening to this and you're in a Discord community or you're in a signal service, don't blindly take trades. You're not missing anything out if some dude puts out a trade idea and it goes up. On the contrary, what you should be doing is, if you're in a community with smart people, look at the trades that they're taking. Don't take them, but understand why they're taking them. And so that you can get into that mindset and understand, oh, he's taking it because of this. Oh, I missed that trade that he put out because, whatever. It happened to be that it just moved when he put out that idea, or her, or whatever, or the in-betweens, because, who knows. But use the examples that they're putting out as references of the things that you should be looking out for. The last thing that I want to see or that I want to hear from people is saying, I lost money because I listened to this guy who told me to take a trade. So don't do that. Don't get sucked into buying masterminds. Don't get sucked into paying some dude to teach you how to trade moving averages. All of that stuff is available for free. And last but not least, learn how to trade with your real money. Do not spend money on prop firms or funding companies. Do not go down that rabbit hole. You will end up spending more money buying those accounts than you will if you take a bad trade and lose money. Just don't fall into that habit. I know it's very tempting. Clickbait, it's $49.99, it's $30, 80% off. Don't fall for that, because all of those things are nothing more than multi-level marketing schemes, and they feed off you with hope. So don't fall into that trap. Learn as much as you can, and don't feel like you're missing out on anything. If the market rallies tomorrow and you didn't catch it, it doesn't matter. There's another trade tomorrow. If the market keeps on dumping and you missed it, doesn't matter. There's another trade tomorrow. There is money to be made at all times of the day, in different sectors, in different types of asset classes. Don't let the red days knock you out. Don't let the green days give you an ego. Treat every day like as if you were blessed to have the opportunity to do this, because if you do it well, you can make a lot of money, but if you do it incorrectly, you can lose a lot. So I hope that's that they can take that away from this.
Couldn't have said it any better. JP, thanks so much. As always, want to remind everyone, please like and subscribe. We are on YouTube, iTunes, Spotify, wherever you listen to podcasts. JP, thanks so much for coming on. And in light of everything JP just said, as always, remember, folks, plan the trade and trade the plan. Have a good night.